Man, it's a good day. Looks like we got some great news. Let's go ahead and get this started. What's up, everybody? Good morning, good afternoon, good night, wherever you're watching, anywhere around the world. This is BitLab Academy daily live streams here on the BitLab YouTube. Welcome to the show. We got some great news to discuss today. We got some really good sort of moves in the shifting in the language from the Fed yesterday after the rate hikes from Chirpal. And I just want to say, hey, things are starting to heat up. The setups have been brewing for a little while. We got a lot of great data. We're going to be breaking down data the first about 10 minutes of the show, maybe 15, and then we're going to be doing charts throughout the rest of the show. We're going to be doing some Bitcoin, but we're going to be looking at a lot of altcoins because there's a lot of different stuff out there, and we want to see what the targets are, how we find those targets, and what we can do to prepare for the best profits in the bull market that is absolutely brewing. My name's Kelly Kellum. Thank you for joining us here in the community, here at BitLab Academy. Make sure to follow me at Kelly Kellum on my Twitter, and make sure you follow all of the website and check out the website and go to all the socials here you see on the bottom of the screen. And make sure, whether this is your first time, your last time, or your only time, I'm just happy that you're here with us. Make sure you hit that like button. Please smash that like button. It's an easy way to help. Hit that subscribe button and ting that bell. Welcome to BitLab Academy daily live stream. Let's go ahead and just first welcome everybody that's here in the chat. Let me know. Give me a thumbs up if all the audio, visual, everything's working. I'm feeling good today. I've been getting some good rest. I've been putting in a lot of work. I did a great interview last night. Really enjoyed the interview with Crypto Lifer, Mr. Sam Price. So definitely check out his channel. He's got a lot of great things he's doing over there. But if you want to find out a little more about me and how I came to be here at the Hit Network with the BitBoy Crypto crew and, running BitLab Academy, go and check out that interview. I break it all down, and we talk about what's going on in the market as well in that interview. But, again, hit that like button, hit that subscribe button, ting that bell. Again, my name's Kelly Kellum. Let's go ahead and jump on into the charts. All righty. First, make sure you come and check out bitlabacademy.com. Sign up for this newsletter. I'm sending out another one today with some great signals. Sign up here also. You get entered to win a free month for the actual courses and indicators that we have within BitLab Academy. And then, of course, please make sure you come and you follow the only at Academy BitLab, which is the BitLab Academy page. And of course, my own page, which is at Kelly Kellum, Kelly Kellam. Let's go ahead and get this going. Man, I'm excited today. I am feeling good. How's everybody feeling today? Are you feeling good? Are you positive or negative? Put a plus or a minus if your portfolio is positive or negative. No matter where you're at within your own portfolio, profitable or non-profitable, that's what we're here for. We're a community to help learn from each other, bridge that gap from beginner to pro, give you all the insights and the knowledge you need, at least start walking you down that path so you can at least understand what people are talking about. And I am going to talk somewhat high level within a lot of data, but there's a lot of great stuff you can do right over here if we come to the BitLab Academy YouTube page. If you're watching this somewhere else, like the restream on the Hit Network 24/7 stream, make sure you come and follow youtube.com/at BitLab Academy. But what I wanted to point out is here, if there's something you don't understand, come into this live section. Look at the titles on these the thumbnails for previous streams, and you can also come over here to playlist and go to the daily alpha series. And I'm trying to really provide these free content for you to really get started in understanding, how you find those crypto gems, what a profitable trade setup looks like, how to use TradingView. This is where I really recommend people start, so you can understand how to engage with TradingView and so on and so forth. And make sure you come down here and check out this tools every trader needs, because there's a lot of free resources and all this. But let's go ahead and get this going. All righty, where are we at? So I'll also have my podcast later on this afternoon. Here it's hosted through my Twitter on Spaces, and then released through major distribution for actual podcasts to listen later. So you can come live and tune in, or you can listen later on Apple Music, Spotify, or iHeartRadio. But this is what we got to talk about today. We had the Fed come in yesterday with 25 basis point hike. What does that mean? Well, it means that the cost of doing business goes up just a little bit. However, why did the market respond bullishly? Well, that's because 99% of people out there that are professional traders on this CME, Chicago Mercantile Exchange, which is a major player within institutional investing, were betting on a 25 basis point hike. So yes, we got a hike, but it basically was within the understanding of what people were expecting, and therefore it wasn't higher than that. And these things get sort of priced in. And so therefore, 30 minutes after that, when Chair Powell, I love how we have to call him Chair Powell, Jerome Powell, the chairman of the Fed, I think that's the title, something like that. But he came in and gave very honestly a change in his language around everything that's going on. I think they're starting to acknowledge they had to be very aggressive early on. They had to be very aggressive because inflation was out of control. But one of the things we all have to understand as well, yes, we printed a lot of money here in the States, excuse me, but we also, nation states around the world also printed money. And that doesn't give us a free pass. But we also, in addition to that printing of money, we also had massive supply chain issues, logistics issues, people out of work, China basically shut down. And let's be, they produce a lot of the goods that we use here in the Western world. So that definitely causes a squeeze, not only on the logistics of getting things here, but having the things readily available to come here. Let's be honest. I mean, let's talk about this for one moment. The reason Bitcoin is such an exciting asset within the global marketplace is because it has a fixed supply schedule, right? And so therefore, when we look at Plan B's stock to flow ratio, and we look at the projected adoption rate of Bitcoin over time, and the use cases going up, as I discussed yesterday on the stream here, there's massive fundamental growth within Bitcoin, but we also understand that there's an absolute supply of 21 million. It's going to take another 140 years. I think it's 140 years to fully mine all the rest of the Bitcoin. And we're having a halving every 4 years. We have an understanding what the supply is, completely opposite to government fiat systems, which basically just turn the money printer on every time they make poor decisions. And let's be honest, that's a pretty consistent issue with most government world currencies. And that's why any world reserve currency, every 100 to 170 years, somewhere in that time frame, basically it's a bell curve, of taking over and then breaking back down to something else taking over as a world reserve currency. And the U.S. has been the world reserve currency now for around 100 years. It's in that ballpark. That's not to say that things can't be different this time, and we continue on. But the reason, and it's not that I even care if it is or isn't, but we have to understand massive shifts cause massive opportunity. And right now we have something very major contending with this, and that is Bitcoin, fixed supply. And so when we're having an understanding of that supply and the values going up, then we understand why Bitcoin is such an excellent choice for not only investment, but also, long-term sort of play of where it's going to go. But when we look at what's going on, today, we had that soft dovish language. Now he's talking about the unemployment. He finally is admitting that maybe we don't need to continue aggressive hikes to bring unemployment up, which is a good marker of one of the true other halves of marker of recession. And the moment he said that, I was watching the chart and we started getting a pump. But we have to also look. We've got Apple earnings. This is all today. We have Apple earnings later, Google earnings, which is Alphabet, Amazon, Qualcomm, Starbucks, Gilead, Ford, Microchip. At Atlassian, we have so much data still on the agenda that we need to keep our eyes on. But we're starting to see some positivity in the market, some risk on mentality coming back into the market, and we're going to talk about that. I'm going to come back to the camera real quick. I didn't give you guys a well enough greeting. I really appreciate everybody here in the community here at BitLab Academy. If this is your first time, put a 1. If you've been here many times, put a 5. And if you have been here from the first stream, put a 10, baby, because you're a 10. We are building a great community here, all encouragement, all empowerment, and knowledge-based. We're not trolls. It's all about data. It's all about those profits. So let's continue on here. Alrighty. And please, hit that like button, hit that subscribe button, ting that bell. So we're going to continue on here, and we got to see one of the things that's contending with how we are understanding what's going on in the market is this chart right here, the DXY or the Dixie or the dollar index, all the same thing, different nomenclature. That's an SAT word right there, nomenclature. I remember that the word nomenclature back from when I used to be in the Air Force. And on our forms for the aircraft, when we were filling certain things out, we had to use, we had to identify what the nomenclature was for certain items. So, alrighty, that's a little tangent there, but you learned something about me. The dollar index is basically weighing the value of the U.S. dollars, the value of the U.S. dollar against a basket of other major world currencies. The British pound being, I think, about 50%. Then we also have the Japanese yen, and we have the euro. We've got a number of these other currencies. So you're weighing the value of the dollar versus the other dollars, other world currencies. And we've seen a very strong inverse relationship to what's going on with the dollar and what's going on with risk on or risk off. And why is this? Why does it matter if the dollar goes up? How does that relate to a correlation of risk assets going down? Well, if we think about it, if money is going into other assets, think of the dollar like an asset rather than like a dollar. If you think of money going into an asset, that means it's coming in some ways out of a dollar. Okay, if you're moving it out of, just holding the currency and you're saying, no, I want to hold Amazon stock or I want to hold Bitcoin. So you are pumping these dollars into this other asset. So the value of the dollar starts going down and the value of the assets you're putting into starts going up. This is a bit of a... This isn't a full, deep explanation as to this because it also has to do a lot with what's going on with other world economies and the value of their currencies. But this is sort of a very simplified way of thinking about it. And we've seen a strong inverse relationship with what's going on with the dollar to what is going on with Bitcoin. When we have strong uptrends in the dollar, which we can see, this is 2022. Look at this uptrend. Let's think about what happened in 2022 with Bitcoin. All of 2022 was a downtrend, and we had some intermediary pumps and look at this strong uptrend with the dollar. And we had a correlated downtrend with Bitcoin. Now, since November, right after we have this triple top here, which I mean, it's almost a triple top, but we have lower highs, lower high, lower high, lower high, and we can see as soon as this started breaking down in November, this was setting the stage for the pump that we started getting in January. Well, why is this? Why is this why is this drop in November into December, basically November through the end of the year? How can I say that this is correlated with the pump that was brewing for Bitcoin and crypto in January? Well, if you remember, if we come over here to the Bitcoin chart, let's go ahead and hide all the indicators and let's just look really, actually, I'm going to come over here to MACD. I'm just going to do RSI here. Boom, boom, boom. Now we're going to come to the macro because that's where we start. And remember when we talked about that massive divergence that was setting up all the way from June through November. And this is about, through this period is about when, this is when the dollar was falling. If you remember, where are we at? If you remember right here, when this dollar's falling, right here, when the dollar is falling and starting to go sideways, this is also correlated with this time in the market, right here, where the Bitcoin fell as well. But then we started getting a lot of flatness right here. And this flatness was following a massive bull divergence, which we can see right here. You see how this point is lower and this point is higher, whereas the price, the bottoms here, this point is higher and this point is lower, meaning this RSI, relative strength index, is showing that there's strength coming into the market, into the weakness of price action, giving some, basically you're putting fuel into the car so it can run. If you have no fuel, you have nowhere to run. So bullish divergences is, think of it like putting fuel into a car so it can run. Or if you're, you can think of whatever analogy you want. And this is correlated also with that falling dollar price action. So the dollar value, the value, for, I think it was over like 109. It broke all the way down now to it's in the $100 range. And 9%, 9 or 10% on the world currency is a massive drop. 10% drop on the Dixie is, I mean, exponentially more exponentially more value change in market cap, if you want to think about that, than even a 50% change in Bitcoin, because Bitcoin is such a smaller asset class as compared to world currencies, especially the dollar. So we saw that set up, and so we're seeing here, when we see the dollar falling, when we're using the Dixie, we're basically analyzing in a crass way a bit of the risk on, risk off mentality. Are things setting up to push higher, or are they setting up to pull back? Is the psychology of the market aligning more with being more risky, you know, be it tech stocks or especially crypto? Or is it lining up to start pumping into bonds and treasury and, basically risk-off assets, infrastructure, what do we call it, defense and like, for instance, Lockheed Martin and weapon systems and stuff like that. For whatever reason, those always do well. They tend to do well, better in recession than risk-on assets. So we're seeing this setup, and especially if we look over here, I'm going to come right here on the top right. If you don't have your chart set up, go and check out the Pro Trading View guide, because this definitely helps you. Come here. I have a setup. I'm going to come down to trad markets. I'm going to leave this, and we can see right here, we're going to go to the dollar. I'm going to hit option and click on this chart. It'll make it main screen. Now, yesterday, if we come down, let's go to the 8 hour or the 4 hour. So this is yesterday. This is actually the 23rd, and everybody was considering. There's obviously a very high consensus within the market about the Fed rates coming in at 25 basis points, which, because the market was already pricing that in, that was very bullish for assets returning back into the marketplace, because there's some, I don't want to call it a surety, there's stability in that, because it's not doing anything out of norms. It's backing off from that 50 basis point hike. We also got that positive wording in the press conference. Let's actually go to the 12 hour here. But we can see this is yesterday here. When that press conference happened, and it was the 25 basis points, and we got that dovish talk by the Jerome Powell, we see the dollar value falling. Now, does this little push up mean the dollar is completely rebound from here? I don't think so, and that's, the reason why is I do option F, come down like this, and look at that. Option F, which is Fibonacci. If you're on PC, anytime I say option, I'm using a Mac. Anytime I'm saying option for a quick key, you can use Alt. So Option F or Alt F. Click here at this top, drag it down here to this bottom, and we can see, look at how often these Fibonacci's play out in every asset class, even the dollar index. Price broke down, and the rebound came right to this golden pocket. Let's go ahead and zoom in here. Look at that. Came right just shy of it. Let's see if it maybe my thing is just a little bit off. It actually is. So it came right up to this level and is rejecting back down. But so I wouldn't necessarily worry about this right now, because this is a healthy move. The market moves like this. Look at those wonky little, this is all little, the small candles along the way. It's because I'm on a very big time frame zoomed in. But it pushes down, retrace, gives another opportunity, trap people, and moves back down. Or similarly, it pushes up, pulls back, gives another opportunity, goes back up. So we have to keep that in mind with every asset we're looking at. But let's continue on with this. All righty, let's see, where are we at? Now, the other thing we want to look at is, we're looking at the S&P 500 here, and look at this macro downtrend line. Remember, it's always macro, midterm, micro. So that's week, month or week, 3-day, daily, 12-hour, and then 4-hour and below, which would be the macro, midterm, micro. And so we can understand, look at this macro downtrend we had on the S&P 500, and we can see this has broken out and tested this line and come back up. I think I even have this mapped out on my chart. If we come over here, S&P 500, yeah, and this is the same line. So you see resistance, 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 broke out, retested, tried to retest again, and is pushing up. And this is looking quite healthy. This is money coming back into the market. Now, I want to caution everybody here. Because I got a scratch on my back. All right. Man, I had too much coffee this morning, if you can't tell. I want to caution everybody here because this move right here does not mean it's new all-time highs. What this means is the bulls for this period of time right now have taken control from the bears. Will they keep control? That's what we got to find out. That's what we need to plan for. That's what we need to take note of with the data in the charts so we can move accordingly. But the money is coming back into markets. Let's go here. Okay, now we're going to zoom out of this. Now I want to look at the Dow Jones. This is obviously, this is more industrial, infrastructure, it's stuff like this. And we can see, this is interesting. The Dow Jones is actually running a bit flat here. We've got, let's do option T for a trend line, option T for a lower trend line. We come like this, and we can see that this is running a little bit flat, and this is interesting because if we look at the Dow Jones versus the S&P 500, this is the cohort of stuff that's more closely related. It's more closely related to risk on than Dow Jones, and the money's coming into the market. Now, what we can also see here, if we look at the NASDAQ has, let's go to stocks, NASDAQ. This is looking like it was pushing back as well. And we can see right here, a lot of stuff, but we got a strong sort of rebound, and we do have some work to go. So while there is money coming in to the S&P 500, NASDAQ is looking like there is some work to be done. If we're looking at this like an asset index, which is what it is, we can also see with the BitLab significant movement, this indicator uses a combination of things like the RSI, like stochastics, various momentum indicators aggregated together, and shows when there's a grouping of multiple indicators that are reading momentum, momentum shifts, if things are very overheated or underheated, if they're very overbought or oversold. And when you get it on multiple indicators, that you're seeing a likely trend floor to the downside, you get this blue signal. When you're seeing it's overheated to the upside, you get this red signal. And this, combined with things like the relative extrema or the hidden volume, gives you the full sort of picture of what's going on in the market. And we're getting this massive blue signal right here. And look at that. This bounced right at this point. And so we do have some work to do here. But let's continue moving on through the charts. But we're seeing a nice break here of this macro downtrend line on S&P 500. And the reason I'm bringing all this up, we're talking Bitcoin, crypto markets, risk on. The reason I'm bringing this up is because if risk on is coming back into the traditional markets, there's not a huge wave of adoption that's going to come in from retail for Bitcoin right now. There will be some. As the price gets higher, the hype cycle builds up and more retail comes in. What's going to be really moving the market right now is the ride or die crypto enthusiasts, crypto investors, crypto traders that are in it and that have been learning through the bear market, like all of you, those of you that are going to make it. So shout out to all of you for still being here and start being prepared as this bull market starts. But we need the institutional money, the bigger players, the smart money, the people with hundreds of millions of dollars, even billions of dollars, to be pumping money into this market. And those players still take huge signals from their understanding of traditional markets. So if we're seeing the S&P 500 starting to pump, and we start seeing Dow Jones also pumping, and the NASDAQ, then we're getting a clear indication from the traditional sector that money is starting to pour back into the market, and it gives more confidence to trade and invest in the risk on assets. So let's continue on here. Alrighty, we're moving right along today. Now, check this out. This is great. You should follow this individual if you have not yet. And this is crypto_burb. I've had him on my podcast a number of times. Brilliant analyst. But look at this percentage of crypto assets above their 200 SMA. What the heck is a 200 SMA? Well, this is something very core, basic you need to understand. Anything that is a MA, SMA, DMA. SMA is a simple moving average. So this is over the period of 200. In this case, I'm guessing it's probably the 200 daily, the average of the price over 200 days SMA. And we can see the trend from November, same sort of time period we were talking about with Dixie, with the dollar index, the November all the way to where we're at now. As the Dixie started to fall, we're getting the market was still testing its confidence. Bulls are trying to push, the bears were pushing it back. And now look at this from the start of the year on. Basically, we've gone parabolic in growth in the general crypto ecosystem. Markets are starting to push up. Risk is starting to come back. Do you guys understand that? Man, I'm just going to pause here for just a moment. Make sure you're following this, all these socials down here if you're not, and please hit that like and subscribe if you haven't yet. But I just want to shout out everybody. How's everybody feeling? Did you trade yesterday during the Fed meeting, leading up to it? At any point, did you trade during the morning? Did you trade during the 2 p.m. to 2:30 p.m. The numbers and then the press conference, or did you trade after? Or did you already have a plan in place? Did you already have a strategy? Did you let things go as you planned, or did you trade emotionally? Let me know what you're doing, because we need to work all this out. Do you have any sticking points right now that you're trying to work on, that you're trying to grow through? Let me know, because we're going to address all those here on the BitLab Academy daily streams. So let's go ahead and jump back into it. Alrighty, we can see that the crypto market in general is moving up. Now, what does this mean? Well, I'm going to come over here to Looknode. This is a newer on-chain data provider that I've been exploring. It seems I'm really liking it. It's quite affordable. Not sponsored by them. This is not a paid promotion. I've just been using it. Thought I'd share it with you guys. I don't even know how to get back to my favorites. Here we go. Favorites. Alrighty. So one of the things I want to show, there's a number of things. I'll just kind of cruise through them here. The Fear and Greed Index is, as you see, we've seen a lot of very deep in the fear. And why is this green? Because if everybody's fearful, that means there's blood on the streets. It's time to buy. We had some really good opportunities to buy, and the fear and greed is kind of here in the middle. And this is to be expected right now, because we've had a bit of a push up, and there's a lot of sort of, people are just happy that it's not just a down market. But what I really want to show is this chart, which I had never seen before. And I really like this. This is almost like an inverted look at a lot of these other data metrics like the NVRV, Z-score. But what this is, this AHR999X, quite a name there. Basically, it's looking at the Bitcoin price relative to the historical price, and it's using some mathematical calculations. But what we really want to look at here is seeing anytime this is really pushing high up into the green is really indicating, has indicated market bottoms. High into the green, market bottom. High in the green, perfect market bottom. High in the green, just on this one, the pandemic dip here, perfectly met that as a bottom. And we've been really dancing in this area. And I think, barring the fact that we had the FTX collapse, this could very well have been a market bottom, but we had the FTX collapse. We got that final washout, and now we're pushing out of this, showing what happens when we push out of this. What happens when we push out of this? We look at the price action. What happens when we push out of this? What happens when we push out of this? So we are setting up for some excellent things going on in the market right now. And lastly, the last thing I want to show you is the balances, not over 10, over 10,000. What has smart money done? Look at this. Smart money has been buying. Look at this. This is over 10,000 Bitcoin. Smart money has been buying into the weakness of this market. Now, where do they sell? Well, we can see that in this inverse correlation right here. As the number of holders with 10,000 Bitcoin goes down, the reason that this goes down, and we can zoom into this a little bit, the reason this goes down is because They are selling into the strength of the bull market. And look at what point they started selling. Right here, just as we broke previous all-time high, and they sold into the strength of the bull market. They're selling to hype cycle buyers. They'd rather take profits here than be left holding the bag in the downside, because the downside is meant for reaccumulating. And that's what we're trying to get myself to do consistently. That's what I'm trying to get all of you to do consistently, so we can be one of these cohorts in the near future with 10,000 Bitcoin ourselves. That's a good goal to have. Let's see if we can get there. So that's all I wanted to share with the charts. Let's go ahead and dive in to what's going on with actual price action in the markets right now. We're going to do a very quick sort of rundown on Bitcoin, and this time it is going to be quick, and we're going to run through a number of different altcoins. I'm going to focus mostly on a kind of scattering of coins in the top 20, the top 50. We'll probably do about hopefully about five to 10 coins. We're going to do as quick as possible here. So we're going to assume we've done the macro, because we all know that we're in a downtrend. So I'm gonna skip the macro today, just so we can get through these quite quickly. So we did the weekly. Now let's come down to the 4-hour time period. I'm going to double click on the chart, see what we got here. For anybody who doesn't know, this is a BitLab Trading Suite. This is marking out all the divergences, bearish divergences, bullish divergences, and it tells you which divergences they are. And we can see this ribbon here is the EMA ribbon, an EMA ribbon for part of the BitLab Market Intelligence Indicator. And we can see it has been riding up on the ribbon, but we're starting to see a little bit of weakness because this ribbon is starting to compress a bit. And that's understandable, because if we come over here, I have a different chart. I think it's this one. If we come over here, look at that. Let's let the indicator print. This is pushing right up against this level of resistance that I had mapped out. And we can see, if we double click on the screen, we can see here that the relative extrema, which when this is sticking out of the cloud, is suggesting that this move is over exaggerated and it needs to cool off or pull back. And as this happened right here, we can see as this pushed up, actually before this even pushed up here, it's sticking out of the cloud all the way through this, and this is cooling off right at this level. And there's a little bit of caution right here with Bitcoin, because we're also seeing a local trend top signal, or let me rephrase that. We're seeing a confluence of overheated signals at this level. Now, the market is, once we start pushing very bullishly, we're going to see a lot of overheated levels. So one of the things I want to point out here is, as you're looking at these indicators, or any indicators you're utilizing, stochastics, RSI, MACD, anything that you use, once we start getting a very strong market back, there's going to be periods of time where there's going to be a certain signal that's overheated for maybe even a week before there's a pullback. So it is of critical importance when you're doing your technical analysis, when you're doing your charting and you're trying to figure out what your targets are. Do not use one signal. Do not use one individual indicator. Even within the BitLab Trading Suite, the full trading stack that we have, the reason we have the market intelligence, which has 9 indicators built into it, or the hidden volume, which it's a combination as well, because it has divergences as well as hidden volume. Relative extrema, which is a combination of about 4 different indicators. Significant movement. Even though those are combinations of indicators, I'm still using, I don't take a trade unless I have 3 of the indicators within the trading stack having agreement, which means if there's 3 of them having multiple, that's a lot of confluence I'm looking for, because I want very consistent, profitable trades. So let's be patient. Let those trades come to us. Now, what we're seeing here is we had a lot of sort of disagreement. Look, this is all the way back to January 23rd. But if we get up here to January 30th, through this region, we're seeing bullish divergence, bearish divergence on the volume, and we're seeing a lot of choppiness, and this was leading up to that FOMC. So where we're at right now, we need to break this sort of $24,000 level, and if we zoom out on this, I'm going to hide this. If we zoom out on this and we bring up the VPVR, there we are. If we bring this up, and I'm going to double click on it, and I'm going to do row size 200. There we go. Now we have a lot more resolution. Now, if I zoom out here, I'm actually going to go on the daily for this. We can see, look at this, all the volume. This is all the volume that's traded at particular price levels. And this is pushed through. It's interesting right here where there's lower volume. Look how fast the price pushed through it. But now the reason this is changing, just so you know, is because it gives the volume on the visible range. So anything that's on the chart, that's what we're seeing. But look at this massive gap right here. Massive gap. So once we break this level right here, this is where price is. This is where price is right here. Once we break through this level, we have no sort of volume. There's very little, if any, very small amount, respectively, of volume traded in this range from basically 24,000 all the way up to 28,000. So once we break this level, I expect to see a very relatively quick move up to this $28,000 level. So that's what I'm looking for right now. If we do pull back, and I've covered this, you can check this out on previous streams. If we do fall back from here, I'm looking at the 21.6 level and then all the way down to 19.6. These are the two main levels I'm looking at, especially if we get this level here, 21.5, 21.6, we'd be fully with authority retesting this level of previous resistance, now support. We've already kind of done it in very small time frames, but if we did get this move down and bounced off, that would be an absolute, very strong confirmation of a bullish trend to come. So, what coins did you guys type in here? Did you say anything? I guess it doesn't matter because we're gonna run through these. Let's run through some coins. I got a whole list here of various stuff. Let's do Ethereum. I cannot believe I have not done Ethereum yet on the stream here. So, how's everybody feeling? Type in chat if you're good. If you're bullish, are you shorting right now? Are you at these 24,000 level of Bitcoin? Are you looking for market downside? Are you one of those bears, or are you just long and adding on dips? Let me know in the comments here, or on if it's already posted or you're watching at a later date. Post down below. Let us know. I want to see what the market's doing. All right, now check this out. Just an immediate look right here. First thing I see, option T. I see. There we go. Option T. Option T gives you an immediate trend line. We can see some confluence here, option T. Come out here, look at this. See, I like to do a couple different trend lines so we see different sort of lenses on the market. And this has broken out here. The levels I'm watching with this would be option J, gives me that horizontal ray. If you're on PC, that's Alt J. We're also going to do one here, option J. And we can see with the VPVR, the volume profile of the visual range, we can see that this is sitting right above this, and this sort of cascades down in volume. This is like a truck riding down a hill. It doesn't take as much energy because there's not a lot of resistance here. But I am looking at this level right here. I'm looking at this level from the local previous high, which is at 2,034, and this is quite a big move. Option Shift. There we go. This is about a 16% move. It's about actually 20% move to the upside, but we have some stops along the way because this is a local high sort of region in this territory, but we've already broken this level here, so let's go right to this previous peak. This would be my next pit stop for Ethereum. Now, I want you to notice with the BitLab trading stack, which if you haven't, go check out bitlabacademy.com. You can come over here to the indicator section and you can find all the info on that. And I'm actually going to be doing another video on this and you can get all the various indicators here. You get them grouped together. Huge discount we still have there. But to use this, what we can see is we do have three, look at that, 1, 2, 3, RSI, momentum, and money flow index, bearish divergences right here, but there's strength coming back into the market. So we're not just going to look at this and just short. We want to see other indications. We did see some, this is on the daily. We saw some bearish volume divergence, and that kind of already played out. And this is gray, so this is not overheated. The relative volatility index, this is trying to cross back up. So let's actually zoom into a little bit better resolution. Let's go down to the 4-hour. This looks like it's trying to be a little bit overheated, but if we zoom out, I don't want to, here, let me double click. If we zoom out and we look It looks like we are kind of riding on top of this high volume node right now. So there is quite a bit of support here, but double click on the chart, bring up the indicators again. We did get a bullish divergence on the volume right here, giving a signal to the upside, and a bullish divergence on MACD, money flow index, and then another money flow index, giving a lot of support to this bullish action. So look at this. This was a perfect signal. This is a perfect signal right here. We have a money flow index launching, basically giving support to the upside right here, as well as having hidden volume follow right after that. So the money flow index was showing you the bullish nature was brewing, and we can see that right here with this flag. And then right after that, we see the bullish divergence on the hidden volume right here following. And this is right, look at this, the candle before this actually breaks to the upside. So what I would do on this sort of setup would be, as this candle was pushing to the downside and closed, we already have this hidden, which is the H. There's R for regular and H for hidden. We have a hidden bullish divergence on the volume, which is one of the best indicators out there. Looking at volume into, especially volume divergences into price action, gives you one of the clearest pictures on intent in the market. So as soon as this candle broke down, I would have my entry. I would zoom in from the 4 hour. I'd come down to the 1 hour, and I would see this was that area of it pushing down. So I would be setting my entry above the second candle. So as soon as we broke above this candle here, that would be my entry with a very tight stop loss right below the close of this candle. So basically the right here, and that would be a very smart move, because that is also even followed right after with a volume divergence right here on the 1 hour, and we have this blue wave right here on the smaller time frame that was leading into that. So we're getting a lot of clear signals here. So with this, what I was seeing here for a target to the upside, let's go ahead and I'm going to turn off auto, go back to the crosshairs, double click on the chart, minimize those. I'd be looking at 1785 sort of region. The only caveat there is I'm not looking at the full range. I'm actually going to, okay, so yeah, I'll be looking at 1785 as a pit stop, and then the next stop up from there would be 2000. Now, the caveat with all this is we need to look, let's go ahead and minimize the market intelligence and go from option F to get a Fibonacci here, to look for some confluences, and look at where we're at right now. We are from this top here all the way to the bottom here. We can see that we sort of rejected at the golden pocket, which is right here, the 0.618, 0.65, found support on this high volume node. It's funny how volume can be a great indicator, right? There's so many different lenses to look at volume. And we bounced off this high volume node, and we're finding more resistance, pit stop right here at this golden pocket. So the next level I'm looking for is this region right here between the 786 and the this previous local high right there. So that's what I'm looking at. Now, if we were to pull back on Ethereum, what I would be doing to find a pullback is you do an inverse of the Fibonacci. You come down here to about, I like to do two different options. The absolute low of this current move here, come up to this where we're at, this level here, and then get another look from the bottom of this actual individual move, option F. And so we can see I'd be looking at the, if we were to pull back, I think the pullback would be more likely, I'd be looking in this region right here, the 1370 sort of region. Now, the reason I would be looking at this level is because there's not much confluence here with the 618, the golden pocket on this larger move all the way to the bottom. This is confluent with the 786 and this previous price action. However, this golden pocket that we have right here on just this move here is in perfect confluence with this basically downward price action trend line right here, and we could very much find that. But because we're in a very bullish sort of landscape right now with the news that came out from the Fed and the new talking points from Chair Powell, we also have to contend with this level right here, which we can see there's a 382 right on this trend line. So the two levels I'd really be watching is this level right here at the 1500 mark for the more of a bullish pullback. or coming down to this golden pocket to the 1379. And the way I have my chart set up, I already actually have, my buy orders. I already actually have some buy orders lined up for this level here. And then what do? We ladder our entries. We don't just dump it all in one wad, right? We want to protect ourselves and prepare for better prices. It's not like if you dump it all in here, what happens is when the price does go down, a lot of people market sell, capitulate, and they're like, or they just beat themselves up for not making good decision. But if you break up your trade entries and you break up your trade exits, you become more consistently profitable over time because you're allowing yourself an entry here in case it does go up, but you're also allowing yourself to take advantage of lower prices if it does break down further from there. So you can set yourself up for success through laddering in your entries and laddering out your exits. So just a brief pause there, just 'cause I need to catch my breath. Woo. So how many people in here hold Bitcoin in their portfolio? How many people have only altcoins? And how many people, let me know if you have, are you holding Ethereum or are you an alternative person holding only Cardano or AVAX? Or I'm curious what sort of portfolio, the top 3 coins in your portfolio, the largest the largest percentage of your portfolios. How do you have you don't have to tell us what the values are percentage wise, like what are the top 3 holdings in your portfolio? I'm curious how many people are more heavy on the Bitcoin Ethereum side and other people that are more heavy just on various alts. So let's go ahead and do a couple more altcoins. It is 11:15. Man, we are flying today. This is feeling good. Make sure, if this is your first time here, we're really trying to build an excellent community, all about empowering love, knowledge, trading. Make sure, please, you hit that like button, subscribe button, ting that bell. And if you are part of, if you're watching on Hit Network, come over here to these, all the links that you see under the screen here. So what do we want to look at next? Let's look at ADA. All right, so look at this. This is a little concerning because I'm just seeing immediately, as soon as I pull this up, we've got this trend line here, option T. This is looking a bit like a ascending wedge, which this is inherently bearish, but because the market is generally bullish right now, we could see a bit of a fake out and then. We could see a bit of a fake out to the downside back up, but this typically about 68-70% of the time does break down. So I would play a little more caution, but let's look at some actual other trade signals, and let's zoom out and look at this. Makes sense. We're pushing up to this volume area right here. That's been look at this. Option J for a horizontal ray. Look at that. Basically a support region, and option J. All this sort of price interactivity right here. We're pushing right up to it, and there's still a lot of volume up right above us. So yeah, we're at a very interesting sort of crossroads right now. I could see Cardano actually pulling back a little bit, finding a bounce, and then rocket shipping up from there. Let's go to this move there. And if it did that, I would be looking at this 382 right here, because this also has a little bit of a volume node, and it's right in this sort of price action region. This price action region right in here. But so I've been stacking up ADA like mad. I've been stacking up ADA Cardano since it was, all the way down to this 24 cents range. I was so mad because I used to hold like 600,000 Cardano. Shout out to the Crypto Love back in 2017 for putting me onto Cardano. And then I thought, and I did kill it, but I thought I killed it because I sold it. I think it was like 5 or 6 cents. And I was like, man, I 5x'd. Well, when months, a year and a half, 2 years later, when it started really, it was slowly climbing, and then it finally rocket shipped up to $3. I did that reverse Captain Hindsight anger math where I was like, man, if I held it, I'd be this super millionaire, blah blah blah. But then you realize you can't do that because there's nothing ever wrong, ever. There is nothing ever wrong with taking profits, but there is everything wrong with never taking profits. You're not going to be mad at yourself for taking profits consistently over time. because there's going to be times when you take profits, maybe a little too soon as to where the market goes. But if you never take profits and you're always just riding it out, then you end up in a situation where unless you have a time horizon of 10 years, of course, but you have your plan in place. You cannot be mad at yourself for taking profits over time and treating yourself so you can reallocate that capital, whether it be to fiat currency so you can spend money in the real world, which we still have to do in some regards, or to your savings account, or to buying your wife or your husband a gift, or to reallocating it back into the market when you have better prices. There's nothing wrong ever with taking profits. You have to pay yourself. So I'm looking for a pullback right here. And look at this. I'm seeing this as well. This is something I can actually see playing out even more likely now. If we do get any sort of pullback like we were talking about on Bitcoin, we can see this almost shoulder here, head right here, and if this does pull back right here, this would be confluent with the left shoulder, head, right shoulder. And if this were to play out, then what we would do here to find a target, we could do option T. This is the neckline here. What is the neckline? Well, let's talk about where my shoulders are, where my head is. It's that sort of trend line that we have that sort of demarcates where this shoulder is starting, finding a rejection, bouncing down, finding rejection, and then breaking through. This is a neckline. And how you take a target from this is from the neckline all the way down the tallest point in the head. And then you basically bring this up like this. And let's just go ahead and take a gander at where that would be. That would be at the 75-cent mark. Now, what I want to do here, when I do find a target, I like to immediately look if there's any sort of, and this would actually probably be somewhere in this region over here. Let's go ahead and look. Let's go ahead and look at confluence with other price action. Okay, so we've got this region here, option, oh, not that, option, control Z, option J. Now we can see that there's going to be a lot, actually look at that. There's a lot of price action. There's almost a hole in price action here, and this goes right to where this volume node is. And this volume node right here is also confluent with previous highs right here. So we have a lot of work to do to get up there, but point being is we're starting to see some setups and some structures that can hint at some higher prices to come. Now, if this were to pull back, I told you, I think it would come down to the 34-cent range. I am leaning more bullish. So although I'm mapping out the bearish sort of action here, this is what I like to do to protect my capital. I map out, I look at, in this case, we're actually seeing a bearish structure. This is an upward pointing, ascending wedge. This typically breaks to the downside, but if Bitcoin breaks 24,000 and starts running, it's very likely, it doesn't mean immediately alts are going to pump, because if capital is all going into Bitcoin, then they might, they might wait until Bitcoin pushes to 28, it cools off, people take some profits, reallocate it back into altcoins. But we also have a much different market than we did in previous cycles. We have altcoins in altcoin projects like Cardano, AVAX, HBAR, Algorand. There's so many coins out there. Matic, Comp, Link, eGold. Which is now Metaverse X or something like that. But we have all these projects right now that actually have some years under their belts and some actual fundamental, they actually have some fundamental and quantitative and qualitative and all this data that's coming in and growth and adoption that we have to play this market as it is today. We can look at the historical relevance of how Bitcoin would run, and then altcoin, they would almost like trade places in a race. That may or may not be the case in this cycle. So we need to pay attention to the structures in every individual altcoin that you are investing in or trading, because you may have situations where one altcoin is running while the rest of the altcoins or other altcoins in your portfolio aren't. And you do not want to just jump between moving ships. Your coin's not moving and you see this, so then you jump into that green candle. And then as soon as you do that, the other altcoin that you had, then that runs and the one you just jumped into starts falling. Don't jump between moving trains. Make your plan, set it, and trade and invest accordingly. So now going back to the Cardano chart, although this is bearish, I want to also look at where the levels are. I think this level, right, if we do push up and sort of break out, if we do push up and break out here, I think we could have something like this and push up to this 46 cent level. And then we also have the next pit stop would be about the 52 cent level. I'm seeing this just from this previous price action top right here. And there's a lot of interactivity through this region. So I'm looking at the 46 cents to 52 cents region as a next region to the upside for Cardano. All right, we can probably do 2 more. Go ahead. I'm going to talk for 1 second. Give me 2 coins you want me to do. Oh, Gala. I see somebody put Gala already. Man, you guys are quick. Let's go over here to Gala. Or as Drew said yesterday, Gala. All righty. Now, what we can see, let's go back up to the daily. Actually, I'm going to do a different Gala chart that has more price action. There we go. That way we get more data. So zooming out, I'm not going to do the whole setup, but we can do this, all this price interactivity here. I'm just going to do option J through there. I'm going to do, yeah, option J. Now, what we want to do here, so let's do, I would guess this is probably at the 382 or 786. I mean, I'm going in reverse. Yeah, this is finding resistance between the golden pocket and the 786 right here. So what we need to do, let me shrink this out. I'm going to go auto. Now we're going to do option T, alt T if you're on PC. Look at that. Perfect resistance, perfect support. Now we can do another option T. No, nothing there. So there we go. So we broke out of that. So that doesn't really give us any clear levels. So what we want to do here is we can also do, okay, so we can look at that, the 3.618. I love this extension for moves. The 3.618 on the Fibonacci, and this is also perfectly confluent with this previous price action low. So what I'm looking at here, the next stops for Gala, and this is already clearly broken out. I think if we do pull back, I can also see another trend line right here. Yeah. We do pull back. That's kind of confluent. See this resistance, resistance, support, 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 support. If we do pull back, I can see getting, I would look for a low around 37, 3 cents, 3.7 cents, 0.03724, and this area right here. And that's also confluent with the 382, as well as this this sort of trend line that we've found here within this price action. Now, if we do break back to the upside, which I think is likely, even if we get a pullback here, I'm only adding. If we get a pullback, you know, like this, I'm only adding at these different regions through here. This is a previous level we can see right here with this high. So I'm looking at picking up here at 43.43. This is 439, and then also a lot heavier here at the 3724. But I'm thinking we're going to push up and find some resistance here at the 7.2 cents, right in this region right here, and then sort of move up from there. When we start moving up, there's not a lot of volume moving to the upside. So once we break this level right here, I think this is going to be a pit stop at the 7.24 cents. I'd really be looking for 8.1 cents here, previous support, previous price action top, and then we also have this. We have this little gap in that 7.24. That this level right here. I'd be looking really at the 8.2 cents, and then from there we only have small little pit stops, 13 cents, 22 cents. And then we're making our way back near all-time highs, and that's obviously going to take many months. I'm just talking about what the roadmap would look like, but that's what I'm looking at in today's charts. That's what I'm feeling. I'm looking at a lot of stuff. I've been stacking a lot of stuff A lot of infrastructure plays, Filecoin, Arweave, the Graph, HBAR, Cardano. I'm pretty well where I want to be right now. I mean, I don't have the 400 million Cardano that I want, but where I want to be as it relates to the assets that I have and the capital that I can deploy. But I really appreciate you all. Please type in the comments below. Put it here in chat. But also, please put it, if you're watching at a later date or on Hit Network or whatever, come over to the BitLab Academy YouTube page. Follow those socials there on the bottom of the screen here. Check me out over at Kelly Kellum on Twitter. And I will see you all in the next episode. Let me know what you think. Today's Thursday. Let me know where you think Bitcoin, Ethereum, and Cardano are going to be tomorrow at 7 p.m. Basically the daily close of the charts. I'm getting excited. I'm really getting excited. Thank you all for being here. I appreciate you. Thank you for being an encouraging and positive community here within the crypto ecosystem. I'll see you all in the next video. Have a wonderful day, everybody. We're going to head over to BitBoy now for some news. And yeah, that's all I got for you. Adios, muchachos. Thank you for watching. Get that crypto. Pack your bags.